Hi, I'm John Persinos, Editorial Director of Investing Daily. And with me today is my friend and colleague, Brad Briggs. He's the Editorial Director of our subsidiary, Street Authority. Brad, thanks for joining us here today.
Thanks for having me, John.
You bet. Let's get right to it. Brad, every Monday you publish on Investing Daily an article that's called Crypto Roundup. What's the purpose of this regularly recurring feature, and who's your target audience?
Yeah, it's a great question, John. Look, there's so much that happens in the world of cryptocurrency in any given week, and it's hard to stay on top of everything, much less decipher what really matters versus what's just hype. So that's where Crypto Roundup comes in. Whether you're a seasoned pro or just dipping your toes into digital assets, my goal is to deliver you the need to know info each week in a bite sized, easy to understand format. Plus, I don't think investing has to be a stuffy affair either. So we like to have a little fun with it along the way.
Brad, you're obviously an enthusiastic advocate of crypto investing, but crypto has its detractors and its adherents. Some people believe that crypto is revolutionary and it's a should be a key part of everyone's portfolio. And there are other people, as you well know, who dismiss crypto as a fad or even worse, as a scam. What do you say to crypto's detractors?
Visa doesn't think it's a fad. Neither does BlackRock, the world's largest asset manager. Larry Fink, who runs BlackRock, he used to deride and laugh at cryptocurrency. He's not laughing now. In fact, they've filed an application for a Bitcoin ETF, and he's making the rounds in the media calling it digital gold. Now, BlackRock takes a lot of heat, but they also have some of the brightest minds in finance. So either Larry Fink and his pals are changing their tune just because they're after management fees, or he's had a legitimate change of heart. There's really no in between. And there's another thing I want to make clear. Crypto is not for the faint of heart. It's volatile. If you can't stand the heat, get out of the kitchen, as they say. But if you do decide to play in this space, I recommend using your play money. That is only what you can afford to lose. Assuming you have all your portfolio ducks in a row, then by all means, go to town. There's another thing I want to talk about too. Anything new and revolutionary on this scale is going to have its ups and downs. It's going to have its bad actors too. Plus, these things take time to grow and mature before people fully understand how revolutionary they're going to be. For example, let me draw your attention to this article from Newsweek in 1995. It's pretty amusing. It basically says the internet was a wasteland of unfiltered data that you can't find anything informative. It pokes fun at people who predict things like e commerce, virtual communities, telecommuting. The point is, we can all get things wrong from time to time. So let me just address the skeptics directly. Whether you think the jury is still out or not, just think of the promise that crypto holds. Never before has such a disruptive technology come along that holds the promise to empower people with greater control over their finances. That alone merits further investigation.
It's true, the mainstream media is often a reliable contrarian indicator. When it dismisses something, it's about to take off. And when it holds something up as the hottest trend, very often that means that trend is going to crash. I can understand why older, more conservative investors would be leery of crypto. I can certainly understand why a cautious income investor in an older demographic would look askance at cryptocurrency. But I'm not one of those who glibly dismiss crypto as a fad. In fact, it's already revolutionizing e-commerce, finance, banking, investing. What are some of the ways in which crypto is permanently transforming the mainstream financial world?
Oh, there's so many. But if I bring something up, I want to do it justice and explain. So I mentioned Visa earlier, so let's just stick with that. Visa has successfully tested a new system that will simplify the payment of the fees that are required for transactions on the Ethereum blockchain, for example. They're also ramping up their use of stable coins. And for those who don't know, a stable coin is um, a type of coin on the blockchain where its value is pegged to a stable asset like the dollar. And it allows for quick and efficient cross border transactions without the need for traditional banking or currency conversions. So you might think crypto might pose a threat to Visa, right? Why are they doing all this? But in reality, it's just the legacy payment rails that are threatened. Just think about whenever you buy something or transfer funds. Credit and debit cards, they take 1 to 3 days to settle. ACH transfers between banks, same thing, 1 to 3 days. And checks, if you remember those take up to a week. Under normal conditions, a payment on the Ethereum network can settle in about 13 seconds, not posted to your account, fully funded and settled. That's your killer app for crypto right there. Secure, instantaneous transfer of money. If this takes hold, then the legacy payment methods I mentioned earlier will be considered Stone Age stuff. And Visa, they could have a first mover advantage. That's going to make users and merchants want to be on its platform. It's pretty cool stuff.
You make a compelling case. Speaking of blockchains, of course, they're the infrastructure, they're the ledgers for that make cryptocurrency trading possible. They run on ultra fast algorithms, and they have a lot of commercial applications beyond cryptocurrency. Explain for us blockchain technology briefly, and the investment opportunities that the blockchain presents.
Yeah, I'll do my best. So just imagine a digital ledger, sort of like an accounting book, and this is where transactions are recorded. This ledger is not stored in one place or controlled by one person. Instead, it's distributed among many computers or nodes across the world. Now, when someone sends or receives a cryptocurrency like Bitcoin, that transaction will be broadcasted to the network. Every time that occurs, it's recorded in a block. To add this block to the blockchain, you need to solve a specific mathematical puzzle. And that's where the crypto miners come in. They use powerful computers to solve this puzzle. And the first one to get it right, they get the right to add that transaction to the blockchain. And in return, they're rewarded with newly minted crypto. But that transaction, it has to be validated by other nodes or other users on the system. And that ensures that only valid transactions are added. And for that reason, one of the key features of blockchain is its security. Once a block is sealed and added to the chain, it's nearly impossible to alter. So, as far as investment opportunities are concerned, the list is pretty much endless. It's just a matter of how detailed and involved you want to be. Of course, you have the cryptocurrencies themselves. Then there's, DeFi projects and staking your crypto to earn yield. We won't get into all those things today. Uh, Bitcoin, it was the first and it's the most well known crypto. And there are thousands of others out there like Ethereum, Ripple, Litecoin. Each one of them has its own unique features and they operate a little differently. And this is where doing your homework is important. We have our favorites over at Capital Wealth Letter, but you can't go wrong with Bitcoin. Right now, the best way to own it is just directly through an exchange like Coinbase. But exchange traded funds that track the price of Bitcoin are coming soon.
Again, I can understand why risk averse investors would be hesitant to invest in crypto coins. They can be quite volatile, and they've been involved in some scandals and sharp ups and downs. But you've just talked about blockchains and their commercial applications, which are potentially vast. Um, if I were a more cautious investor, wouldn't I be better off looking for picks and shovels plays that leverage blockchain technology?
Sure, there are some opportunities out there, like the chip maker NVIDIA. They make the GPUs that are used to mine crypto. And if there's a surge in crypto prices, then demand for GPUs is going to spike as mining operations ramp up. Now, NVIDIA has surged a lot recently, largely thanks to the AI boom. And while this stock can be pretty volatile, uh, this company has so many good things going for it that I wouldn't rule out even more gains over the coming years. Then you have companies like Block and PayPal, which they integrate crypto payments and allow merchants to accept cryptocurrencies. Then there's Coinbase, which operates as an exchange where you can buy and sell crypto. It's up triple digits this year. But if you're really curious about cryptocurrency, then I would encourage you to at least open an account at an exchange like Coinbase and buy a small amount of Bitcoin just as a test. There's really no better way to get a feel for how this works. And trust me, anyone can learn this. We even have a full report explaining the proper way to buy, secure, and store your crypto over at Capital Wealth Letter.
Oh, that's great. Yeah, and some of the mega cap stalwarts in Silicon Valley, they're making major investments in the blockchains, of course, companies like Microsoft and Intel. And these companies are hardly fly by night. I mean, they're not direct plays on crypto, but it's one way to get your toe in the water. Let me ask you, what's your prognosis for cryptocurrency for the rest of 2023 and into 2024?
Yeah, it's a good question. Crypto's in a bear market right now. There's no doubt about it. The industry, it's still recovering from recent scandals, and they're slugging it out with the SEC over how it should be regulated. But we are seeing some signs of hope. There have been a few recent legal victories that should serve as a wake up call to regulators that crypto is here to stay and that the two sides need to work together. Even some members of Congress are getting up to speed on crypto too. At the end of the day, the best thing for investors and the industry at large is that we just get some clarity. And as more news comes out related to things like regulation and even the Bitcoin ETF, I expect more bullish sentiment to return later this year and into next year. But my eye is really on 2024. That's when something called the halving happens for Bitcoin. See, every 4 years, the reward for mining Bitcoin gets cut in half. And historically, these events have led to significant price surges. The next one is expected in April 2024. And Pantera Capital, a leading blockchain investment firm, did an analysis on this. And based on previous halvings, they made a pretty bold prediction. They think Bitcoin could rise to about 35,000 leading up to the halving. That'd be a 40% rally from current prices. And then by July 2025, they think it could rise to 148,000. Now, time will tell whether they're right, of course, but there are plenty of other reasons to be bullish over the long run. And I personally wouldn't want to miss out on the ride either way.
Yeah, that's pretty impressive. And so, if people who don't want to invest in crypto or won't give it its due, they need to understand the train is leaving the station, whether they're on it or not. Brad, thanks so much for your fascinating insights today.
Thanks, Sean.
I just spoke with Brad Briggs, editorial director of Street Authority and our in-house expert on cryptocurrency. Look for Brad's weekly article, Crypto Roundup, on investingdaily.com. I'm John Persinos. Thanks so much for watching.